On the 12th of June 2026, SpaceX went public in the largest IPO in history, making its founder and CEO Elon Musk the world's first trillionaire. One man now controls more wealth than the poorest 46% of humanity combined, and that has a fair few people asking a couple of obvious questions. Should anyone hold that much? And does the world actually need a trillionaire at all? So today, we break down the rockets that built this fortune, what $1 trillion actually means when you stop and measure it, and why the answer to whether we need trillionaires directly affects your paycheck and your pension. My name is Guy, and this is the Finance Bureau. Elon Musk is the wealthiest person in the world, and by most measures, one of the wealthiest people to have ever lived. But the majority of his fortune comes from just one company. Back in 2002, Musk founded SpaceX, and it's not a stretch to say that it was a hugely risky undertaking. On IPO day, he remarked that he'd once given the whole thing less than a 10% chance of succeeding. No government, no traditional investor, and no institution was willing to bet on fully reusable rockets. The first 3 Falcon 1 launches failed, and by 2008 the company was nearly bankrupt. But the 4th launch succeeded, and that long shot is now valued at roughly $2.5 trillion. Put simply, reusability changed everything. Before SpaceX, rockets were junked after a single use. Now, individual Falcon 9 boosters have flown and landed as many as 35 times, slashing the cost of reaching orbit by over 70%. By 2025, SpaceX was conducting around 83% of all US space launches and, according to its own IPO prospectus, lifting more than 80% of all mass placed into global orbit by weight. But the rockets aren't actually the cash machine. That honor goes to Starlink. Now, Starlink is, of course, satellite internet, beamed down from a constellation that now numbers over 10,000 satellites, which is roughly 3/4 of every active maneuverable satellite in orbit. In 2025 alone, Starlink pulled in $11.4 billion in revenue, around 61% of SpaceX's total, with $4.4 billion in operating profit. And SpaceX's monster valuation can in part be explained by the fact that Starlink has what analysts call software-like margins, which is just a fancy way of saying that once the satellites are up there, every new subscriber is almost pure profit. So, when SpaceX finally went public on the 12th of June, the market went bananas for it. Shares were priced at $135, opened at $150, and closed the first day up over 19%. The offering raised $85.7 billion, nearly 3 times the previous record held by Saudi Aramco. To put that into perspective, by company valuation, SpaceX's debut was the equivalent of listing 17 Facebooks at once. Or, measured by fresh capital raised, it was more than 5 times what Facebook's IPO pulled in. Within 3 trading sessions, SpaceX briefly touched a market cap approaching $3 trillion, momentarily worth more than Amazon. And Elon Musk owns somewhere between 42 and 49% of all of it. That stake, plus his Tesla holdings, is what carried him across the $1 trillion line. Meanwhile, the IPO created over 4,000 new millionaires on paper, from senior engineers right down to support staff who held equity. So, all in all, a pretty feel-good story, especially if you happen to be Elon Musk. However, there's a catch to this monster fortune, which we'll examine in a moment. But before we do, let's put that figure of $1 trillion into some kind of perspective, because it's almost too large for the human mind to adequately comprehend. First, let's try and visualize it in terms of time. 1 million seconds is about 12 days. 1 billion seconds is roughly 32 years. 1 trillion seconds, that's about 31,700 years. And if we go back in time by 31,700 years, we're back somewhere near the peak of the last ice age, humans have yet to invent agriculture, and there were probably only a few million of us scattered across the globe. Or we can think about it in physical terms. $1 million in $100 bills is a stack about 3 feet tall. $1 billion is over half a mile high. But perhaps the craziest comparison is this one. The gap between the wealth of the average American and that of Jeff Bezos is around $254 billion. The gap between Bezos and Musk is over $750 billion. In other words, the average American is closer in wealth to Jeff Bezos than Jeff Bezos is to Elon Musk. Let that, as they say, sink in. But it only gets starker. On SpaceX's IPO day alone, Musk's net worth gained more than $100 billion in value. That single day's gain was larger than the entire fortune of Bill Gates, and Musk's total wealth now sits at around 3.4% of the entire US economy. Now, for comparison, at the absolute peak of his empire, John D. Rockefeller was worth about 1.5% of US GDP. And indeed, only about 20 countries on Earth have an economy bigger than this one man's personal fortune. As Senator Elizabeth Warren put it, the typical American household would need to work more than 11 million years to accumulate $1 trillion. 11 million years. I mean, safe to say you'd have to really love your job to stick at it that long. But, as you'll no doubt be relieved to hear, there is a catch when it comes to Musk's utterly insane level of wealth. He can't actually spend it. You see, less than 0.1% of his fortune is in cash. The other 99.9% is unrealized stock, a valuation of shares he is legally forbidden from selling until around the 12th of June 2027, thanks to a 366-day IPO lockup. So, when a headline screams that Musk is worth $1 trillion, what it really means is that the market currently prices his shares at $1 trillion. That is a very different thing from having $1 trillion. And the proof came almost immediately. On the 22nd of June, just 10 days after the IPO, SpaceX issued $20 billion in bonds to refinance debt, and the stock dropped around 16% in a single session. On that one day, somewhere between $150 and $350 billion of Musk's net worth simply evaporated. A paper loss larger than the entire net worth of Warren Buffett gone before lunch, without Musk selling a single share or posting a single lame tweet. Now, this begs the question of how any ordinary person is supposed to make sense of wealth that swings by the size of a national economy in an afternoon. And that's exactly why you should be reading the Finance Bureau newsletter. It's absolutely free, and we break down everything regarding global finance, commodity markets, macroeconomic trends, and monetary policy so that you never miss what truly matters. All you have to do is click the link in the description or scan this QR code on your screen to get started. Okay, now, while the volatility of Musk's paper fortune is enough to make most of us feel pretty seasick, it isn't actually the biggest issue. The deeper problem is whether the trillion was ever really there to begin with. You see, at its IPO, SpaceX was valued at roughly 94 times its annual revenue. For context, Meta trades at around 22 times and Amazon at around 18. A multiple above 40 has, historically, a dismal long-term track record. And remember, despite all that revenue, SpaceX actually posted a net loss of $4.94 billion in 2025, driven by enormous spending on AI data centers and Starship. So, analysts at Morningstar and CFRA put the company's intrinsic value at around $780 billion, which is less than half of what the market priced it at. In other words, the gap between what SpaceX is arguably worth and what the market says it's worth is itself measured in the hundreds of billions. So, where does the rest of that valuation come from? Well, essentially from a bet on the future. A bet that Starship achieves airline-like launch cadence, that Starlink keeps growing, and that Musk's recently absorbed AI company becomes a giant. Even valuation expert Aswath Damodaran of NYU called the company's claimed $28.5 trillion addressable market a, quote, hallucination. Ultimately, this trillion-dollar valuation is just a story the market has agreed to believe, priced in dollars, and it could be repriced tomorrow. Which brings us to a more searching set of questions. Does the world even need this? Is SpaceX a net good for humanity when there are so many problems yet to be solved on Earth? And should a single individual really be this rich? Well, Musk's many defenders would point out that nobody else would attempt what he's attempted. Reusable rockets, a global satellite network, mass-market electric cars – these are decades-long moonshots that don't fit a quarterly earnings cycle. Nobel laureate William Nordhaus has calculated that innovators typically capture only about 2% of the total value their inventions create, with the other 98% flowing to society through lower prices and better products. So, by that logic, even a trillion-dollar fortune might be a small slice of the value SpaceX eventually unlocks for everyone else. Meanwhile, Tesla arguably forced the entire car industry towards electrification a decade early, while those reusable rockets give scientists and governments cheaper access to space than ever before. And, as mentioned, beyond Musk's own windfall, the IPO also minted thousands of employee millionaires along the way. So, the argument on one side is simple enough. The expectation of a Musk-scale payoff is the very thing that makes people take Musk-scale risks, from which everyone else will, eventually, benefit. But there is an equally serious case against this concentration of wealth, rooted entirely in the mechanics of power. Because even if such wealth is only on paper, the control it grants is absolutely real. Musk controls roughly 2/3 of all active satellites in orbit, which means one private individual has a chokehold over critical global communications and defense infrastructure. No democratic body ever voted on that. Meanwhile, inside his own company, Musk's Class B shares carry 10 votes each, giving him approximately 85% of the voting power, which makes SpaceX a controlled company with virtually no independent oversight. Then there's the tax question, and this one lands directly on you. Because Musk's wealth grows through unrealized stock he never sells, and he can fund his life by borrowing against those shares instead, he pays remarkably little income tax relative to his fortune. It's a strategy critics call buy, borrow, die. And it means a firefighter paying tax on every single paycheck can contribute a higher effective share of their economic growth to the public purse than the richest man who has ever lived, which, doesn't really seem all that fair. And the political reaction to Musk's windfall was immediate, with Bernie Sanders, Elizabeth Warren, and others using the milestone to demand a wealth tax, citing economist Gabriel Zuckman's proposal for a 2% annual levy on fortunes above $100 million. So, those are the two sides, and now we reach the part that actually concerns you. Because this is no longer a story about one eccentric billionaire and his rockets. SpaceX is being fast-tracked towards inclusion in the major stock indices. And that means your 401k, your pension, your retirement fund is about to be exposed to this company whether you chose it or not. If you hold an index fund, you may soon own a sliver of a business valued at 94 times revenue, built on a story rather than on a balance sheet. If that story wobbles, the way it wobbled on the 22nd of June, or worse, then the fallout extends past Musk's paper wealth and directly hits the savings and investments of ordinary people who never actively bought a single share. And here's the asymmetry at the heart of all this. Musk himself is locked in until 2027, but he also has the deepest possible cushion, advisors, optionality, and a fortune so large that losing $300 billion still leaves him the richest man on Earth. The everyday saver pulled into his orbit through a passive fund has none of that protection. If the whole SpaceX story turns sour, then ordinary investors will be the ones who feel the pain, while Musk will be free to plow his remaining billions into his next moonshot venture. So, the rocket company that's promised to take us to Mars has, for now, produced the first trillionaire here on Earth. But through the index funds in your retirement account, his risk is becoming your risk too. Meanwhile, the existence of a trillionaire forces us to ask if a system that can mint one person richer than 160 nations, while a firefighter pays a higher effective rate, is a feature of how we reward ambition or a flaw in how we've tilted the whole machine. And well, that's about all we have time for today, but what do you think? Is a trillionaire the unavoidable price of the kind of innovation that gives us reusable rockets and a satellite internet revolution? Or is one person commanding resources larger than most countries simply proof the system has tilted too far, with the rest of us on the hook if it all goes south? Let me know your thoughts in the comments down below. That's all from me for today though, so as always, thank you very much for watching and I'll see you again soon. This is Guy, signing off.